Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of company filings before they make sense of your wallet. Today we're diving into Profusa Inc. and a deal that looks like they're trying to sell a lot of their stock, but hey, who am I to judge? Grab your coffee, this could be a bumpy ride. Alright, so Profusa Inc. is putting out a current report, basically telling everyone what's up. The big news here is about them selling stakes in the company, kind of like when you sell off some of your belongings to get some quick cash. So here's the main event. On July 28, 2025, Profusa inked a deal called a Securities Purchase Agreement with Accession Partners Fund LLC. Think of it as a handshake deal to sell shares, but a super official one. They're looking to raise up to a whopping $100 million by selling shares of their common stock. This isn't a single sale though, it's more like a flexible arrangement where they can sell shares as they need them up to that $100 million limit. How does this flexible selling work? Well, below a dog's notice to Accession Partners. After they send that notice, there's a period up to 10 trading days to figure out the price. The price itself is set at 97% of the average stock price during that period, but there's a floor price, meaning it won't go below a certain amount. They're also capping how much they can sell in one go, either $5 million or a percentage of the recent trading volume, whichever is less. Now, there are some important limits here. They can't just sell an unlimited amount of stock. There are rules about how many shares can be sold overall, often tied to how many are already allowed to be traded publicly, or a percentage of the company's total stock, unless they get approval from their shareholders. And get this, whoever buys this stock, Accession Partners, can own more than 9.99% of Profusa's stock at any given time. This is to prevent one single buyer from getting too much control too quickly. A small but important procedural detail is how they deliver the shares. They have to deliver them as DWAC shares, which basically means they're delivered electronically and very quickly. On the same day, they give that advance notice if they mess up and don't deliver on time as sent. Partners has options like just cancelling the notice or making Profusa pay for any losses they incur. On top of selling shares, Profusa is also giving Accession Partners a warrant. Think of a warrant like a coupon that allows you to buy stock at a set price in the future. In this case, it's for 900,000 shares. They're also arranging other agreements like a registration rights agreement, which is important, and we'll get to that, and lock-up agreements from Profusa's own executives. Both sides are making promises. Profusa is guaranteeing things like being a properly set up company, following the rules, and that nothing majorly bad has happened to hurt the business. Accession Partners, on the other hand, is confirming they're a sophisticated investor, meaning they're not some small-time individual investor and that they intend to hold onto these shares for a while, not flip them immediately. There are also restrictions placed on Profusa. They can't do similar stock selling deals or make certain other stock-related moves without getting the okay from Accession Partners. This is to protect the deal they've just made. They also have to keep their public information up to date and tell people about this deal. Now, for something really interesting about where this money is supposed to go. The proceeds from selling these shares are to be used only to buy Bitcoin, unless the company's cash is really low. If their cash balance is above $5 million, the money goes to buy Bitcoin. If it's below $5 million, they first have to use the money to get their cash balance up to that $5 million mark, and then whatever's left can be used for Bitcoin. This is a pretty specific and unusual instruction showing a clear strategy focused on digital assets, but they can't use the money for things like paying executives or giving out dividends. This deal isn't forever. It will end either in July 2028 or when Accession Partners has bought the full $100 million worth of shares, or if either side simply decides to end it. So it's flexible but also has an expiration date. Remember those warrants we mentioned earlier? Let's talk about those commitment warrants. Profusa issued these to Accession Partners right when they agreed to the deal. These warrants are to buy 900,000 shares at a tiny price, just a penny a share. But there's a catch. If Profusa doesn't actually sell any shares under the main agreement within 100 days, the number of shares those warrants can be used for gets cut in half. Now let's talk about that registration rights agreement. This is super important for Accession Partners. It means Profusa has agreed to help Accession Partners sell the shares they buy and the shares underlying those warrants to the public. They need to file paperwork with the Securities and Exchange Commission, the SEC, to make sure these shares can be legally sold. Profusa has to get this registration statement filed very quickly, within 10 days of signing the agreement, and they need to try their best to get it approved by the SEC within 30 days. If the SEC doesn't flag it for review, they even have to try and get it done faster. They have to keep this registration active until all those shares are sold or can be sold freely. Accession Partners get special rights here. they can demand that Profusa register their shares, meaning they can force the company to file the paperwork. They can also piggyback their shares onto other registration statements Profusa might file. Like if Profusa was already planning to sell more stock for itself, Profusa is on the hook for all the costs associated with this registration. That includes fees to the SEC and whatever stock exchange they're on, plus legal and accounting bills. The only thing they don't pay for are any commissions the buyers' brokers might charge. And speaking of costs, Profusa also has to protect Accent partners. If there's any mistake or missing information in the paperwork that leads to a lawsuit, Profusa has to cover the legal costs and any damages for Accent partners. Now, let's touch on unregistered sales. The shares being sold under this deal are being offered under a specific exemption from the usual registration rules based on a part of the law called Section 4 Sab 2. This is because Accent Partners is an accredited investor and is buying these shares for investment purposes, not to immediately resell them. This means these shares might not be freely traded on the market without further registration. And finally, the exhibits. This report includes the actual agreement called the Securities Purchase Agreement, the form of the commitment warrant, and the registration rights agreement. These are the documents that lay out all the fine print of this deal. It's important to remember that these are just the agreements filed, the actual financial impact, and the execution of these agreements are what we'll be watching for in future reports. So what's my take on all this? Profusa is clearly in a phase where they need capital and they're getting it through a flexible but potentially dilutive stock sale agreement. The focus on buying Bitcoin is a bold move, showing a strong conviction or perhaps a desperate attempt to diversify into a volatile asset class. The terms of the deal, like the discount on the stock and the warrants, mean they're paying a premium for this capital. The register on the stock and the warrants mean they're paying a premium for this capital. The registration rights agreement ensures that the shares sold can eventually be traded, which could increase the supply of Profusa stock on the market. A key risk here is the volatility of Bitcoin itself, which could impact the company's strategy and financial health depending on how it performs. Profusa's success will depend not only on its core business, but also on how well it navigates its cryptocurrency strategy and manages the dilution from these stock sales. Alright, that's our breakdown of Profusa's latest filing regarding their big sale. What's your take on these numbers and what they signal for the company's future, especially with that Bitcoin twist? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.